Hello and welcome to this week's fund review. Before we get into Dodge & Cox Income Fund, let's first take a look at our disclosures. This video provides general education. Nothing shared in this video is to be considered tax, legal, or investment advice. And don't act on any information in this group or in this video without first consulting your tax, legal, or investment advisor. This week we have Dodge & Cox Income in focus. This fund was chosen from a poll we did in our Facebook group. So we put some bond funds up there that were popular in 401ks and individual accounts. And this was the leading vote getter. So we appreciate everybody who logged on with suggestions and placed their vote in terms of what we were going to review this week. Dodge & Cox Income Fund has been around since 1989, with a lot of that management team being there the whole time. The average manager tenure is about 16 years. So this is a really experienced team. And you need that when you're running a $68 billion fixed income fund with 1,100 holdings. You can't talk about Dodge & Cox Income without first talking about the strength of Dodge & Cox overall. They're a reputable fund company. They're held in high regard by most advisors. And one of the reasons is they don't bring a ton of funds to the market or try to do every little niche or hot fad. When they come out with a fund, they're in it for the long term. And they've got a very precision lineup, very concise. And this fund being added in 1989, it's also part of the Dodge & Cox Balanced Fund as well. So again, very good, strong company with a really targeted lineup. Their fixed income style box is moderate and moderate. So if you think along the bottom of interest rate sensitivity, there's limited to extensive. So they're in the middle there as far as left to right. And then up and down is credit quality, with highest quality being at the top and lowest quality at the bottom. So they're moderate on both fronts. Their Morningstar category is intermediate core plus bond. So that's different than intermediate core in that they can branch out a little bit in terms of credit quality and the sectors that they play in. Also, a lot of times you'll see intermediate core plus funds have some additional emerging markets in there or some international bonds as well. So you see that show up here in the super sector diversification. They're overweighted when you compare them to the benchmark, which is the Barclays Aggregate Bond Index. So on the corporate side, they're overweighted there, and also on the securitized section as well. So they're pulling that weight from government securities. So that tells you that's where the plus comes from. This fund is moving out from the index, and it's going out on the spectrum as far as risk goes. And it's risk under the prism of its fixed income too. So they're looking for a little bit additional return from that risk. When you compare the credit quality, this is again another place where active management comes into play in security selection. So what shows up here is their position in BBB and BB bonds. So those are going to be much larger size positions than the benchmark is going to have. And they're pulling that again from AAA rated bonds. So it's going to be a little bit more aggressive in terms of the type of bonds that they're purchasing. From an expense ratio standpoint, very competitive. You've got a category average of about 74 basis points. This fund is at 42 basis points, which means for every $1,000 invested, you're paying $4.20 to have that money run. What you're paying for when you're comparing that to an index fund, which is little to no cost, is you're hoping that that 42 basis points that you're paying is going to lead to some performance of both other funds in their category and the index overall. So in the last 10 years, Dodge & Cox Income has outperformed its peer in this category 6 out of the last 10 years. And it's had very good years the last couple years. So coming in at 9.5 about for the last couple years, where the index has been strong as well, but you've gotten pretty good outperformance recently from Dodge & Cox Income. Same thing against the benchmark. So they've outperformed 6 out of 10 years here as well. The category and the index, like I said, are both strong the last couple years, but this is an area where they've outperformed. When you look at 2020 was an interesting year. They're still very positive on the credit sector, which makes sense, right? When you look at how they're exposed and where they're weighted. So they were very happy with the way corporations handled themselves through 2020, especially the early part of the year with all the volatility. They did extend the fund's duration a little bit. So extending the duration of the bonds overall that they invest in, but it's still less than their index and still less than a lot of their peers. One of the interesting things they did in 2020 was during some of that early in the year volatility, they went in and purchased some corporate bond ETFs as well as some index credit default swaps. So what that tells you is that's your active management coming into play. Just because it's a $68 billion fund and because it's a sort of an old time fund management company doesn't mean they're not willing to make some moves when they see the opportunity. So those credit default swaps on the index side and the corporate bond ETF still only made up at peak about 3.5% of their portfolio. But again, what you're looking for is you're looking for marginal shifts there to get that incremental outperformance of the benchmark or of the category. And they did a good job of that last year. So overall, in conclusion of this, in wrapping up this slide here, we're talking about the experience of Dodge & Cox just is a fund family overall, but specifically to this fund, it's a very strong organization. I think this fund is a good fund. It may not be best to have this as your only bond fund, but potentially paired with a core bond fund and maybe even a short duration fund or a stable value if it's inside a retirement plan. And I'd give this fund a B+ grade. So if you're watching this fund review on YouTube, please check out the 401k group on Facebook. In that group, you'll be able to have some say in terms of what funds get reviewed here on this platform. And if you are in part of the 401k group and you're watching this video in that group, be sure to check out the YouTube page. We're going to have some additional fund reviews there that might not necessarily make their way over to the Facebook group. So we appreciate everybody that's logged in and watched this video today. So in terms of how I can help plan sponsors who are running retirement plans, we can service 338, we can educate their employees, or just perform some one-off plan consulting. We work with individuals and families on wealth management, and also some advisor support too on the 338 side and also with TAMP programs. So again, thank you for watching this video.